The online delivery platform Zomato reported its Q3 numbers, and overall it was a miss on the estimates coming in from the street as well as the analysts. Now look at it, just revenues actually have continued to rise, EBITDA continues to fall, while net losses were lower mainly because of the exceptional gains. Now this is just the gist that I've given you all. Now let me take you all through more in detail how the numbers were. When you look at the revenue growth, it grew by 8.6% on a quarter-on-quarter basis, and it was up by 83% on a year-on-year basis. Now overall, though the revenue was seen a sharp jump on a year-on-year basis, it was still below the estimates. So that is why a bit of a miss coming in on the revenue fronts as well. Now overall, Zomato, the online delivery platform giant, mainly reported the loss of around 63 crores. Now when you look at the losses surely have narrowed, because this time there was an exceptional gain of 316 crores, which surely benefited the bottom line of the company. That's why the losses have narrowed and come in at 63 crores versus 352 crore loss in the same period last year. Now obviously the revenues also jumped mainly due to the increased demand and the exceptional gains, which aided the overall performance in terms of the revenue jump of the company. Now let's move on and talk about the GOV. That's the gross order value. In Q3, the gross order value grew by 1.7% on a quarter-on-quarter basis, while by around 84.5% on a year-on-year basis. And this was mainly lower, that we've seen come a bit lower due to the reduction that we've seen, lower customer delivery charges, and obviously along with that, we saw a shift now coming in, dining out, increase in dining out post, we started the reopening scene coming in. So that's why the gross order value has seen a slight bit of a reduction coming in. Now obviously when you look at it, the gross order value was a bit underwhelming because there was a reduction in the delivery charges, which resulted in the lower than expected revenues as well. Other than that, contribution margin also declined further, and while QOQ there was a decline in the employees expenses, which resulted a bit in the lower EBITDA losses. So that is something that is supported because of the employees expenses. But all in all, let me take you all through a brokerage note. Credit Suisse has come out of the brokerage note on Zomato's earnings. They maintain an outperform rating on the company with a target price of 120 rupees per share. Now mainly this was a weak quarter. What they are saying, the GOVs also have slowed down is what the company has highlighted. Overall, the Q3 numbers were below their expectations as well. And overall GOV estimates was below their estimation of around for FY22 to FY24 as well. So surely they also highlighted it was a weak set of a number, but nonetheless they are maintaining an outperform rating on the stock. So surely keep an eye out on Zomato going forward as well.